Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis, October 29, that would be Wednesday, 2014. This is a daily chart of the SPY, and today was our Fed day, right? Our waiting with bated breath Fed day. And what happened normally happens, right? The Fed came out with their nonsense, the market gyrated around, everybody looked surprised. Everybody tried to figure out what they were trying to say rather than what they did say. I don't even know what they said. I didn't look. I don't care. It doesn't make any difference. Look at what the market tells you to do and do it, and that's it. So here's what we had. The market went down and went up and went down and went up. And usually on a Fed day, we finish up. Today, I'm going to call this a flat day, even though it was slightly down. The S&P was down 2.75. The Dow is down 31 points, and the NASDAQ was down 15 points. And after this rally that we've had, right, you can't really consider this much of a down day. However, there is some more upside possibly in the market, and that could happen throughout the remainder of this week, possibly even into next week, but maybe just the remainder of this week, if it happens at all. If not, and if it does happen, you're going to get a pullback after that, right? You're going to get either, go sideways for a couple of weeks or a pullback. I would like to see us come into this 200 period moving average, make a higher low, and then take off to the end of the year. It never does what I want. It just does what it does. But that's kind of what I'm looking for. That would give you a nice, a nice up move. Here's an A, B, C, right? We talk about the A is the up move, the B is the downward corrective move, usually about half of this distance, okay? And then a propulsion off of that move to newer highs, maybe even this year. We'll see about that. So So I'm looking for either some more upside this week or a pullback, but even if we don't get a pullback this week and we do have the additional upside, following that we'll get a pullback. This market has to correct itself at some point. It's just inevitable. And you've had this stellar move on huge volume here. And, I just want to make mention of that. This day, the volume on the Spider was 380 million shares, okay? And when you look at that, the last time we had anything remotely close to 380 million shares, we were back in April, okay? And you see what happened in April, and then we took off from there. So, it looks like a good low. It remains to be seen. It just this much volume, this kind of move. This isn't just short covering, right? There's buyers in here, so there's some meat behind meat and potatoes behind this market on this up move. So whatever pullback we get, I'm not expecting a large pullback, and that's kind of the story until further notice, and that's where we are. What else do we have? Let's go look at gold. Gold got ugly today. In fact, gold after hours is still down $10. It's down at 12.14 today, and gold went down on the Fed announcement, right? It's not horrible, but if you don't have a reversal tomorrow or the next day, I think gold is finished, and I think you're going to go below 1,200, and from there, nobody wants to hear it, so I won't discuss it. Things like 1180, 1150, 1130 are in the cards, but we're not going to discuss it. And what else do we have? Oil. Let's go to the USO. The USO took the opposite today, and it was up. And the dollar was up, and gold was down, but oil was up today. And you're still going to struggle through this high here at 31.50, and then you'll really struggle because this had a huge volume day at 31.92, and the volume here was about two times the average, and this was even more than that, this low here. So that's where we are. There's not a lot of upside remaining unless you could pop through here. But here's the 20-period moving average. You have this high here. That's on big volume. So that's going to be a ton of resistance. it would be difficult to get through there. But if you did get up there, depending on how we got up there, this could be an actual short level as opposed to higher prices. So we'll see what happens when we get there. But it's a no trade right now. There's really nothing going on in that trade. Facebook got crushed today. So, you know what? This is worth mentioning. So what do we have over the last few weeks? Tesla's been struggling. I'm going to talk about some market leaders, right? Netflix got hammered, big gap down. Facebook, big gap down. Twitter, big gap down. What else? Oh, IBM hammered. What else got hammered? The energy sector hammered. So there was a couple of other big ones that had gap downs. I just can't think of them off the top of my head. But the bottom line there is when the market leaders start to crack one by one and their charts to become broken, there is something underlying in the market. Now, these type of things can take some time to play out, but these are the things, I always talk about the things we take notice of, the indicators, the little signs that we get from surrounding markets. Like we look at the IWM to tell if the market's weak or strong because small caps tend to lead on the up and the downside. And right now, IWM was actually a little bit weaker today. I think we might have topped out in IWM, and let's go over there. I'm sorry to jump around tonight, but it's worth a look here at IWM. So IWM, I think this was going to be considered maybe a reversal day. It doesn't look like a reversal day, but it seemed to reverse today. If you look at an intraday chart, let's look at an hourly. You see you made this high here, you came down, and now you're going sideways, and this is like a bearish pattern, so you can have some further downside right into this 20-period moving average, and then in this area here right above or into the 50 down here back at 111. Now, if we made a low here, maybe even this gap fill is probably a good area, 111.22, so we'll call it 111, even number. That is, if we can make a higher low here, that would be a good number on this pullback. We'll see if that's all it gives us, but right now, I don't know if you'll get much more out of a pullback depending on what happens. So we have to see how it unfolds. But my point is, I want to go back to the market leaders. So you look at stuff like Netflix. You see this big gap down here. That's a broken chart. IBM, IBM, big gap down, broken chart. Facebook, okay, big gap down, broken chart. It's not broken. I mean, on a weekly basis, this is still in an uptrend here. Don't get me wrong. I'm just talking about the short term. This is still, as long as it's above these moving averages, that's in an uptrend. But now you go back to the daily chart and you see, this big move here, you're usually going to see more downside. It's very rare that a stock will just snap back and just brush off a $5 down day on an $80 stock like that. Usually there's some more downside, and I think it wants to come into the 72 and a half area, and possibly even this low here at 70. And if we go much lower than that, you're probably going to go down almost another $10 down to 60, down to this low here, $62 here. This pivot low is a good spot. So that's kind of the outlook on Facebook. But let's look at Twitter. Here's another. This was a market leader for. I did it again, talking and typing. Look at this stock. And after hours, you see it was even trading down around $40 today. It's probably going to go down and attempt to fill this gap here at 38.65 roughly. So that's another broken one. I don't think, what happened to LinkedIn? I don't remember. I don't trade this stock a lot. Yeah, I mean, this took a dip, but nothing too terrible. So anyway, the point is that your stocks that are played by all the hedge funds, the big market leaders, the big cap tech stocks, that type of stuff, some of them got really busted up pretty bad. And so the question is, if we have another leg up, what's going to lead us up? That's where I was going. So it remains to be seen. We're going to have to see what happens. Energy's broke. Some of the big tech names are broken. what's it going to be? That's the question. What's going to take this market on the next leg higher? And until we can identify what's going to take the market on the next leg higher, we're not going to have a next leg higher. So we have to see how that plays out. But that's where I stand there. Other than that, I think, oh, you know what? Let's talk about interest rates because it's worth mentioning. Here's what you have. You had a Fed announcement today, so it'll spike in interest rates, pull back. This is the TNX, which is the 10-year interest rate, okay? 2.32, 2.32 at the close today, okay? This wants to go higher, but you're going to come into some resistance. You probably hit some resistance here today and then up at this 50, and you're going to have to consolidate for a while, have a little bit of a pullback, maybe down to the 220, 222 area. And then if that happens, you can have another leg higher up into the 250 to 260 area. Okay, so that's what we're looking at for interest rates, and that's going to be a little bit of a interesting scenario for the economy, maybe positive for the banking stocks. So we're going to have to see. Maybe the banking stocks are going to lead us higher. Maybe everybody will take the tack that since interest rates are going to creep higher, if they do, then the banks are going to be able to have, expanded earnings because the spread between what they can borrow and lend at expands. And if there's higher interest rates and they're still able to borrow at next to zero, okay, and the 10-year creeps up a little bit, all right, so the the spread between the borrowing and the lending is profit for the banks. So if it costs us more to borrow and it costs them about the same to borrow, they capture that spread. That's all profit. That's how the banks make money. The banks make money on the spread and fees. That's it. It's probably more fees than spread, but it has been recently. But fees and spread, that's how banks make money. If the spread widens, okay, then they earn more money. It's that simple. So that's a possibility. I'm looking for that. We'll see what happens. The election is going to have a lot to do with where the market goes forward also, because if the Republicans take the Senate and maintain leadership in the House, okay, they're going to try and force the president to do some things energy related, maybe the Keystone Pipeline. They might put pressure on the president to approve the Keystone Pipeline, and if that happens, then some of the energy sector is going to rally. And potentially coal stocks may get out of the basement. Those have been dead for years, and maybe they'll carve out a bottom in the coal stocks. So we'll have to see what happens. The next couple of weeks are important in the markets. If they put in a bottom and we see how the elections play out, we see certain things starting to develop, maybe the bank stocks, maybe energy stocks. We'll see what happens. We'll have a lot to play for in the coming weeks and months ahead. So that's where we are, folks. This is going to be a wrap tonight. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis.